What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw a very high volume bounce, which is a very bullish indication. Was this all just one giant bear trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in this stock market today. Alright, so like I said in the intro, we did see a very high volume bounce today with SPY going up 1.53%. And you can see we almost matched the volume of the high volume selling. So this is a very impulsive bounce. Anytime you see a strong bounce after oversold conditions, you want to look at the possibility that it was all just a bear trap and you need to quickly flip the script and get bullish very quickly. When you're in a market that's highly volatile like we're currently in with the VIX over 26, you're going to get very wild swings in both directions, but you have to follow price action. Without a doubt, bouncing off of 450 and closing back above our 50 EMA is very bullish price action, and it happened on very high volume. So strictly staying objective and strictly following price action and technicals, high volume buying after high volume selling is usually a good indication that we're close to a bottom. It doesn't mean that we did bottom and there's no way we're going any lower than where we closed today, but it does mean you need to look at the possibility that we're not going to break back below 450. So right now, the most critical support level that I want you to pay attention to on SPY will be 450. If we break back down below 450, that will be your indication that we are going much lower and we are very likely going to fill the rest of these gaps. So on a breakdown below 450, look for the gap fill at 447, the gap fill at 442, and possibly even the gap fill at 436. However, with the high volume bounce and closing back over the 50 EMA, if the bulls can reclaim any of the support levels above 450 and not get a lower low, I am instantly going to assume that that was the bottom in the short term and we're going back to a new all-time high or at least a lower high consolidation wedge before we see which direction we're going to break out. I don't even have to ask if a lot of you are buying puts because I can see that a lot of you are buying puts. And the put call ratios are absolutely off the chart and everybody is just way too pessimistic and keeps forgetting that we're still in a very strong bull market. I can prove to you very quickly we're in a strong bull market by switching over to the weekly chart, and you can see on the weekly chart, even though the week is not yet over, there's only one day left in the week and we're already starting to bounce off the 20 simple moving average on the weekly chart, and we still have a strong bull trend on the weekly chart. So I know a lot of you like to use that word permabull, but if you're not a permabull in a macro level bull market, what are you doing with your life? This is a bull market and you should be a bull in a bull market, and you need to look at everything through the lens of a bull while you're in a bull market. If you're getting overly bearish in a bull market, you're simply just doing it wrong, and you want to go in the direction of the trend because, as I always tell you, the trend is your friend. High volume buying after high volume selling, still in a bull market and holding over critical support is almost always going to be an indication that you want to keep holding on to your long positions. If I switch this over to a monthly chart, you can see that we did get a very bearish looking candle in the month of November, but we really need to start closing below the low of that candle, which is at 455, and right now we're currently above 455. So the longer SPY is sitting above 455 and staying above that support level at 450, you need to stay optimistic and you need to start considering the fact that this was all a bear trap. Now don't get whipsawed, because if you're buying puts and switching to calls and then switching back to puts and the market just continues to chop around, you're going to absolutely have a terrible time. So right now, my direction for you would be stay in the side of the macro level trend, which is still bullish, and continue to buy off support as long as we're staying above 450. Again, if we break below 450, we're very likely closing those gaps and those will be buying opportunities. So right now, the strong resistance levels I want you to pay attention to are going to be at the 5 EMA and our resistance trend line. So essentially, we're looking for SPY to try to break back above 460. If we can break back above 460, we still need to get back over 462 and eventually close back over that 20 simple moving average at 465. Once we get back over the 20 simple moving average, it's going to look like SPY is full bull and we are going back to new all-time highs. So prepare for the possibility if SPY gets back over 465 that we are going to start running to that price target up there at 477. So right now this market just became extremely easy because you only really have one critical support level you need to pay attention to, and it's SPY 450. If you're a bull, which I think you should be, you're staying bullish as long as SPY is above 450, and I really don't think it gets any simpler than that. So let's go ahead and move on over to the NASDAQ 100 triple Qs, and again we can see very high volume buying. We exceeded the volume of the last 2 high volume selling days on a green day, and we did bounce off of that 50 EMA as support, and we did maintain closing back above 388. So overall, even though we did have high volume selling, things are quickly switching back to the bulls' advantage, and we are holding up above very critical support levels, and we are seeing high volume buying. So just like I told you on SPY, it's very simple. I'm going to give you a very simple level to watch on the triple Qs, and it's going to be this 50 EMA. If the triple Qs can stay above 385, you need to stay bullish. And if the triple Qs start closing below 385, you have another very critical support level just a couple of dollars lower, right around 383. If the triple Qs can stay above 383 to 385, I think you need to stay bullish. Otherwise, we could be coming back down to about 374, and we're very likely going for another leg lower. If you're following price action, you should still be bullish because we're still above the 50 EMA on both the triple Qs and on SPY. However, don't forget we still don't have the bull trend, so we need to see the triple Qs getting back over 396 to regain the bull trend and increase the probability that we could see new all-time highs. So right now, critical resistance will be right around 393 to 394 and getting back over that 20 simple moving average at 396. Once the triple Qs are back over 396, we're looking very bullish, and we should more than likely break out above 401, and we could go hit that price target up there near 410. Take it day by day, and right now you just need to watch critical support and stay bullish as long as we're above that critical support. You can also see the triple Qs did have a Bollinger Band squeeze, which means we are about to see a period of very high volatility, and very high volatility can work in either direction. We could see a very impulsive rally to the upside, or we're going to slice through this critical support and see a very impulsive rally to the downside. Either one is possible, and that's why you need to watch these critical levels and follow the price action. Jumping over to the Dow Jones, again, we saw very high volume buying, and we saw the Dow Jones jumping 1.81% today and getting back above that level at 344. We're still closing below all the moving averages and still closing below the negatively sloping 5 EMA. So even though this was a very strong bounce, you can definitely see that the Dow Jones has a lot of damage repair because we're still not back above the 50 EMA, which is all the way up there at 353. But don't forget that it's not a matter of if gaps get filled, it's just a matter of when, and we still have a huge gap on the Dow Jones up here at 356. Are we going straight up there to fill that gap right now? Only time will tell, but we will need to break back above some of these resistance levels and see some bullish price action, and the first breakthrough will be a close back above about 349 to 351. So you can basically call that right around 350. If we can get the Dow Jones closing back above that resistance, we're very likely going to at least test the 50 EMA as resistance. And if we can get back above the 50 EMA, we're very likely closing that gap at 356. So when you see high volume buying and you know that everybody and their mother is buying put options, it's more than likely we're going to see a continuation of this rally. And we could very easily see the Dow Jones joining that rally and closing the gap above. So stay optimistic, and the critical level on the Dow Jones that we need to stay above is down here at 338. If we close below 338, look out below because we're going much lower in the Dow Jones. In the Russell 2000, we also saw very high volume buying today, and we did see the Russell 2000 going up 2.79% today, but still closing below our critical breakout level right around 221. We need to see the Russell 2000 getting back above 221 to 222, and we definitely need to see the Russell 2000 closing this gap above at 228. When we close that gap, we'll be back above the 50 EMA, so the bulls will have full control, and they will need to get a breakout back above 232 to show that the Russell 2000 was not just a false breakout, and we are indeed going back to new all-time highs. Remember, right now, this was all just a false breakout when the Russell 2000 broke out above 232, got up there to a new all-time high, and then broke back down below 232. That was our evidence that this was all just a false breakout. The rest is history, and it was free fall from there, and we got down to our very critical support level at 213. Now remember that 213 is not just a critical support level. If we break below 213, we're very likely going to see the Russell 2000 going into a bear market. So right now, this looks like a full-blown correction in the Russell 2000 from the high all the way to the low, seeing a full correction of about 12.7%. When you get a correction of 10% or greater, that is a full-blown correction, and there's no guarantee that you have to go any lower. So if we see the Russell 2000 start breaking below critical support at 213, that will definitely be a bearish indication, which tells us it's more than likely not just a correction, it's going to turn into something bigger, and we could see a full-blown bear market. So as long as the Russell 2000 is bouncing off that support at 213, you need to stay optimistic about the possibility it's going up there to close that gap at 228. And then if we close that gap and continue to break out, we could see another full-blown bull cycle in the Russell 2000. So critical support is 213 and critical resistance will be 222 and 229. On the Arkk ETF, we also saw a very high volume day, but the Arkk ETF just could not gain any traction and it basically went absolutely nowhere, only going up 0.43% and closing below that support level at 99. So right now, the Arkk ETF is still looking very weak and it needs to start bouncing and getting back above 107 as soon as possible to prevent this downward resistance trend line from getting things out of control. So if we see Arkk continuing to break down lower, you're looking for support at 94 and 90, and we need to get back above 107 to start forming higher highs and higher lows. The real bullish breakout will be a close back above about 114, and then we still need to take out the previous daily high way up there at 119 to say that Arkk could be going back into a bull cycle. Right now, Arkk looks very weak, but it could be full-blown capitulation. And when everybody and their mother has sold, there's only one direction left to go, and that's up. So don't rule out the possibility that we could see Arkk going back into another bull cycle after we did see this capitulation. Jumping over to the VIX, we can see the VIX is still well above 26, closing right around 28, but we did see the VIX dropping about 10% today. Overall, you can see the VIX is still in a full bull trend, and it's still holding this breakout look above 26, and this is not something you just want to ignore. So while I'm telling you this could all just be a bear trap and we're getting ready to go higher, we need to see the VIX telling us that that's also the case. So tomorrow is known as VIX Crush Friday. So if we don't see the VIX getting crushed back down below 26, that will definitely be a very big warning sign that we're going to see a deeper correction. If the VIX is holding above 26 after a VIX Crush Friday, that will be a very concerning sign that the stock market is not done going lower. So I repeat, if the VIX does not close below 26, you need to remain cautious that we're going to see a lot more downside. As long as the VIX is above 20, you need to stay very cautious and you need to remain defensive. If the VIX can get back below 20, then we're back into a full-blown bull market and we're very likely going to see a continuation of the secular bull market. But right now, as long as the VIX is above 26, stay cautious and watch those very critical support levels that I gave you on all of the indices. On Bitcoin, we're currently down about 0.4% and we see Bitcoin is very close to trying to break out of our resistance trend line, but the breakout level is still going to be up here on a close back above about 60,000. So Bitcoin is bullish above 60,000 and Bitcoin is getting a lot more defensive and bearish if it closes below 52,000. Everything else in between is just noise, and you can see that it does look like Bitcoin is forming somewhat of a bull flag. So if we can get this bull flag to start breaking out to the upside, we could see Bitcoin getting up there to the previous all-time high and potentially breaking out. So right now, look for that bullish breakout above 60,000 on Bitcoin or the bearish breakdown below 52,000. On Amazon, we were down 0.18% today and confirming that we are likely going to see more weakness in Amazon stock, closing below the 50 EMA for the second day in a row. The good news is we still have that support trend line right around 3,400, and we could see Amazon bouncing off that support level and making another attempt to go back into a bull cycle. However, if we break down below 3,400, look out below because we're more than likely going to see Amazon coming back down to 3,311, and below that we could be coming back down to 3,185. If Amazon can get back above 3,460 and close back above 3,500, we could start testing our resistance trend line right around 3,570, and if we break out above that, we could start back into another bull cycle. So look for the breakdown below 3,400 to get bearish or the breakout above 3,570 to get bullish. On Tesla stock, we were down just about 1% today, closing back below the 20 simple moving average, but it still looks like we're finishing out this bull flag. Remember, I told you we had one more trip back down to our support trend line, and with today's price action, we are back down to the support trend line. So this is the point in Tesla that I've been telling you to wait for, and now you're about to find out which direction Tesla is going to go. We're either going to break down below this support trend line right around 1078, and then we're going to break down below 1000 and close the gaps below, which are at 843 and right around 900. That would be the bearish breakdown on a close below 1000. We're more than likely closing those gaps, or we're going to see the bullish breakout and we're going to start blasting through about 1166, close the gap at 1208, break out above 1240, and then see the price target up there at 1400, and that would be the bullish breakout. So we're either going to break down below 1070 or we're going to break out above 1170, and that's going to tell you that Tesla is more than likely going to the bull side or the bear side. Everything in between is just consolidation and we're just ping-ponging around inside this wedge, and it's just basically Tesla going sideways. So watch that trading range breakout because it's very close to deciding which direction Tesla stock wants to go. On Apple stock, we were down 0.61% today, which is not that bad considering that we had a very large gap down with Apple opening down around 158 and closing all the way back up near 163. There's still a very tiny gap above that still has to get filled around 164, and you can see the price action is still above all the moving averages and we still have the full bull trend. So Apple stock is not just going to roll over and die easily. You're talking about one of the biggest market caps in the whole entire stock market and a very strong bull trend with very high bullish volume. So right now, as long as Apple is staying above 162 and 157, you need to stay on the bull because there's still the possibility Apple is trying to get up there to that price target at 171. You have resistance at 166 and 168 on the way there, with strong support at the 162 and 157 levels. If we start breaking back down below 157, look out below because we could see Apple go through a full-blown correction. On the financial sector, we were up about 3% today, closing back above the 5 EMA, but still below the 50. We need to see the financial sector getting back above the 50 EMA and closing the gap above to possibly regain a bull trend. The industrial sector was up about 3% today as well, closing back above the 5 EMA, but still below the 50. And just like the financials, we need to get back above here to close the gap to possibly go back into another bull cycle. The healthcare sector was up about 0.5% today, getting rejected below a negatively sloping 5 EMA and closing below all the moving averages. So the healthcare sector is still looking very weak at this time and it could have more downside. The energy sector was up about 2.9%, getting all the way back up to the 50 EMA, but failing to close above it. Watch the price action at this level because if it gets rejected from here, it could be going down for another leg lower. So jumping back over the S&P 500, you can definitely see we're not out of the woods yet. We still have a very elevated VIX above 26, and we still have a lot of very weak looking sectors, but we're definitely starting to see some sign that the bulls are still out there and they're not just going to roll over and die easily. Remember, I tell you that bull markets do not die easily, and I showed you the weekly chart on the S&P 500, and we are still in a very strong macro level bull market. When you're in a macro level bull market, that takes way more precedence over the daily chart, and right now on the daily chart, we're just trying to figure out day-to-day moves, but we don't have any clarity just yet. The market could go through a full-blown correction, or this could just be one giant overblown pullback and the pullback is now over. Remember that in a pullback scenario, you're only going to get about 3 to 5%, and you can clearly see that SPY pulled back right around 4.3%. So SPY is in that pullback range, not a full-blown correction, as long as we stay above about 5%. So watch that very critical support at 450 because if we break below that, we could see the full-blown 10 to 15% correction. But right now with the price action back over the 50 EMA on high volume buying, I think you need to keep an open mind. And if you're still buying puts, I can't stress it enough that that is likely not the best option right now. With the VIX this elevated and put premiums as expensive as they are, all the market has to do is continue to drift up slowly or go sideways, and you're still going to lose a ton of money even if you end up being right and the stock market does continue to go lower. So buying puts is not as easy as you would think, and shorting a bull market is definitely not an easy thing to do either. So right now, just remember we are in a strong bull market and it is looking more and more bullish with today's price action, and it will be very volatile until we see the VIX getting back down below 20. So stay objective and stay flexible because this market is very likely still going to have plenty of whipsaws, and that's why I told you it doesn't mean we can't go lower. Just make sure we don't go below 450. It's that simple, so keep it simple and you'll stay on the right side of the trade. And if you're still not sure what to do, you're much better off doing absolutely nothing at all. Stay in cash and wait it out and wait till we have much more clarity. Don't forget, I also do have Bank Trade Alerts, which is a trade alert service that only trades the ETF TQQQ, and you get all of your buy and sell alerts directly via email and text message. I still have the Black Friday deal for 67% off your first month. So if you're interested in joining Bank Trade Alerts, you can find out all the details and how to get the discount by clicking on the link below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.